my last video, I actually shared that I was looking forward to reaching that $55,000 value in this portfolio. And today's Friday, and at the record of this video, this portfolio sits at around $55,216. Great thanks to the market, because some of the numbers from the jobs report that came out today influenced how the market performed, hence the reason why we saw this 0.59% gain today. Now, to be honest, I'm not super excited because I know that the stock market can turn around on Monday or Tuesday or even anytime next week. And if that happens, we can find ourselves back below that $55,000 value. But the reality remains that this shows that we are trending in the right direction. So let's take the win, let's take the green, and let's move towards the next target. Of course, $56,000 is the next one. How soon are we going to get there? Obviously, I cannot tell you exactly when. But one thing I know is that consistency leads to result. And as long as I can continue to do what I've been doing and the market does its own thing, I believe that we will head in that direction. As for the stock market, it performed pretty well today. All the indices are showing pretty green, and we have Dow showing about 0.48%. On the S&P, we're seeing about 0.65%. On Nasdaq, we're showing about 0.82%, and the Russell shows about 0.78%. Not bad for a Friday, and starting the week, the full trading week for 2026. Now the question is this trend going to stay with us through the year 2026 and even the coming years? We don't know that for sure, but one thing is certain: the S&P 500 ends Friday with another record close, scores a winning week, and that is exciting. As we see here, the S&P is approaching that 7,000 point, and the Dow is approaching that 50,000 point as well. So we are getting close to a very significant number in terms of levels for these two indices. And that can sometimes prove to be difficult to get to and hold. So the question now remains, do we have enough, stimulus in the system or enough appetite by investors to actually get us through this 6,000 or 7,000 rather, and this 50,000 points on the Dow? Now, a few things that will rattle the market next week are two important ones. One is, of course, the CPI that comes out on Tuesday, on January 13th, 2026, and the PPI data that comes out on Wednesday, January 14th at 8:30 a.m. and that's the PPI that comes out, core PPI as well. Now, those values will be very important for next week. In addition, we have the initial jobless claims that comes out on the 15th as well. So these three economic data that comes out next week are important to keep in mind, because they can definitely present buying opportunities if the market goes down, or it could mean more money in our pockets if the numbers come out just perfect. And that means that maybe inflation is either in line with expectations or maybe not as bad, or again, it could go the opposite way, and that would determine what the Feds will have to do with interest rates. And remember, one of the things that we investors worry about is interest rates, of course, because that impacts how consumers spend money, and of course how businesses also use the money that they have, or at least get access to money. So all of that will definitely be important for next week. While the market is at all-time highs, we have this information from Bank of America, and it says, Bank of America says extreme sentiment indicators all scream sell. And after reading through it, I can just highlight the important areas here. It says Hannett pointed to a cluster of extreme positioning indicators in a note to clients Friday. Bank of America's bull and bear indicator has climbed to 8.9, well into sell territory, while the firm's fund manager survey shows cash levels at 3.3%. Another historical warning sign: investors poured record amounts into investment grade credit, equity, exchange traded funds, gold, and cryptocurrencies in 2025, according to the bank. And it reads on, they all scream sell. Hannett wrote, adding that the balance of risk for major equity indices now points to more downside than upside. That is a bit troubling because this is not what we want to see. We want to see reasons for the market to go in the upside, not downside. But this information that they are sharing, again, they're just sharing their own analysis based on data that they are gathering. That doesn't mean that things will go in this direction. But it also means that as investors, you have to be ready just in case markets turn around. And this is where it is always a good thing to have some cash set aside in order to be able to buy good companies when it falls. So that goes to the first question. How do you plan to have more cash on the side? Well, don't invest all the money you have. I always try my best to have some funds in the buying power, right? That's the cash right there. So that way I can use some of that to buy opportunities. Then I also still have a little bit of money that is in maybe a savings account, checking account that I can always use when necessary. This is the quickest way, of course, but if I need to transfer, good thing is Robinhood also has instant transfer that can be done in order to take advantage of good buying opportunities. There is always going to be some opportunities, but not all opportunities are to be taken. And the reason why you sometimes would have to watch some stocks for some time from different companies that you like, and of course slowly add them to the portfolio. Like I mentioned, one stock that I've been adding recently is Netflix, and Netflix is one that isn't really doing so well in terms of stock performance at this point, but in terms of company, it's actually doing pretty well. So I plan to slowly add to the position of Netflix over time. Another one that I've mentioned to you lately is Target. Target has been doing pretty well in a couple of weeks towards the end of last year and into this year now. And one target number that I have for Netflix for Target was if it could hold above 100, and it's steadily done that over the past couple of days now. As long as it continues to do that, I will continue to remain optimistic about Target because they're getting a new CEO, and once a new CEO comes in, there's always a lot of things done to turn the situation around. I wouldn't want to go into too much details about other stocks that I'm sharing, but if you're interested, please let me know in the comment section. Share your thoughts about the portfolio. Let me know what you are doing. Remember, this content is for educational purposes only and is not intended as financial or investment advice. All investing involves risk, and you should do your own research or consult a qualified financial professional before making any investment decisions. See you in the next video.